Have you ever, stopped to really think about your bank? You know, the one holding your savings? They give you this tiny percentage back, right? Maybe 2, 3%. But then you hear about them making just billions in profit. Billions. And it makes you wonder, how? How are they making all that money? Often, I mean, with your own cash.
Yeah, it's a great question. And it's something we all deal with constantly, don't we? Banks are just so central. Salaries go in, loan payments go out. But you're right. Thinking they just manage money is, well, way too simple. What we're doing in this deep dive is really peeling back the layers on what is, frankly, a very shrewd business model. It's much more than just opening an account for you.
Exactly. So, yeah, our mission today, unpack those surprising, almost ingenious ways banks make their revenue. We want to give you that shortcut, to understanding the system you use every day. So let's dive right in. Let's see what they're really up to. Okay, so let's start right at the foundation, the core idea. You put, say, $1,000 in your savings account. The bank promises you that little bit of interest, 2 or 3%. Feels safe, like the money's just sitting there. But is it? What's the first thing they actually do with that cash?
Oh, it's definitely not just sitting there. No way. The bank takes a big chunk of that money almost immediately and lends it out. Home loans, personal loans, you name it, business loans too. But here's the kicker. They lend it out at a much higher interest rate. So while you're getting maybe 2%, 3%, they might be charging, say, 10%, 12%, even 15% on the loans they make with your money.
Okay. So that's the trick. It's not just that they're using our money, it's the massive difference between what they pay us and what they charge others.
Precisely. That difference has a name. It's called the net interest margin, NM.
Yeah.
Or sometimes just the spread. And this isn't just, one income stream. It's really the bank's core earning power. Let me give you an example. Drawing from some source material that uses Indian figures like crore, which is 10 million. Imagine a bank gets, say, 100 crore rupees in deposits. That's about, what, $12 million maybe? Okay, so they lend out maybe 80 crore of that. They might pay depositors, let's say, 3 crore in interest. That's 3% of the 100 crore. But on the 80 crore they lent out, maybe they earn 12% interest. That's 9.6 crore rupees coming in. So the bank's profit just from that activity, 9.6 minus 3, that's 6.6 crore right there.
Wow. Okay. That simple gap multiplied over millions of customers and billions of dollars or crores suddenly becomes this huge profit engine. And most of us probably don't even notice it on our statement.
That's right. It's fundamental.
But hang on, that's just the interest part, isn't it? Because when I think about my bank, honestly, it feels like there's a charge for breathing near the building sometimes. Are all those little fees just like annoyances? Or do they really add up? Are they part of this shrewd model?
Oh, they absolutely add up. They are definitely significant. ADM is the foundation, sure, but banks generate a massive amount of income from all sorts of charges and fees. Think about it. ATM withdrawal fees after you hit your limit.
Yeah, hates it.
Charges if your balance dips below the minimum.
Ugh, yes.
Fees for sending money electronically. Those instant transfers, sometimes called RTGS and AFT,
Right.
IMPS, depending on the system. And credit cards. Annual fees, late payment penalties, over-limit charges.
Right. So it's not just the big loan interest. It's death by 1,000 cuts almost. Every little transaction, every service becomes another small income source for them. Multiplied by millions, that must be enormous. It really shows how comprehensive this model is.
And there's still another piece. Banks don't just lend out all the money either. A portion, quite strategically, gets invested elsewhere. This could be in really safe things like government bonds, stable returns. But they might also put some money into the stock market, seeking higher returns there too.
So investments too. That makes sense. They're diversifying their income as well. So let's recap. You've got the big one, interest margin from lending our money out. Then you've got this constant stream of fees and charges for, well, everything. And then you've got returns from their own investments. Add those three together. And yeah, you can see how banks get so rich. It's quite a setup.
It is a powerful combination.
Yeah.
But it's really important to remember it's not risk-free for the bank. Not at all. This whole model has inherent risks baked into it. What happens if people or businesses can't repay their loans?
Yeah. Good point.
When loans become what the industry calls non-performing assets, or NPAs, bad debt, basically. And when loans go bad like that, it can cause serious losses for the bank, huge losses sometimes. Managing that risk effectively is, well, a critical part of being shrewd.
That explains so much. That's why they put you through the ringer before giving you a loan, right? All that verification, checking your credit score, your income. It's not just bureaucracy. It's them actively trying to protect themselves, protect that profit engine from the risk of loans going sour. They need to be pretty confident they'll get that money back.
Exactly right. So when we step back and look at it all, what we've really seen today is that banks aren't just passive safekeepers for your cash. Not by a long shot. They are active architects, you could say, architects of wealth. They're constantly using money to generate more money. It's a financial machine designed to compound capital.
It really is quite something when you break it down like that, isn't it? A truly, well, shrewd business model.
Yeah.
So now that you understand a bit more about these surprising ways banks make their money, how does that change things for you? Does it change how you see your own bank? Or maybe how you think about using financial services in the future? What other questions does this raise for you about, the whole financial world around us? Definitely something to think about.